Okay, I'm going to get started this evening, and this is going to be a little bit different. Most of you, I think, if not all of you, have are familiar with my work and are familiar with the videos that I do. A lot of you have been members. A lot of you are members. I have known the gentleman that is going to join us, just that's actually on here now, and this is going to be a part of this. Ben Lichtenstein. I've known Ben, and Ben can correct me on this when he comes in, for maybe 15 years. Ben has a just a very deep and broad experience with trading. Uh, I'm gonna start, and I'm gonna give you, a lot of you may or may not know my background. I'm not going to bore you too much with too many of the details, but I think it's important, especially in this time frame that we're in, that you understand who is talking to you. And I've tried to be transparent about my path in trading and my role as a trader. But I've been trading almost 40 years. I'm 70 years old. I am the father of four, the grandfather of three. I plan on trading for another 10 years, retiring when I'm 80 and running for president. But between now and then, I'm continuing to trade. I have traded, well, for 40 years. I trade futures, ETFs, stocks, options. I started trading in the mid 1980s, and I have spent more time in front of a trading screen than 99.9% of people out there, simply because I had access to it, because I started in this business as a broker. I've owned my own brokerage firm. I've owned a commodities futures brokerage firm. I've traded institutionally. I have been a partner in hedge funds, been a hedge fund advisor, and I trade, and I still trade. I trade every day. Now, I trade all time frames. I trade all instruments. I am not a person who sits here and tries to make, $10,000 a day Twitch trading the ES in and out for ticks. I'd rather shoot myself. There are various ways to trade. And that's part of what I think Ben and I want to share with you, is that, trading is too often promoted as a one size fits all approach, and it's not that way. It can't be that way. If you're a discretionary trader, there's discretion and judgment involved. Now, if you're a systems trader, that's a different animal. But almost anyone that is going to watch this is, to one degree or another, a discretionary trader, even if they are rules based and even if they employ systems in their trading. And I know some of you do, and that's great. To each his own. Also, I don't have a paint by the numbers approach to trading. I have a very specific worldview that I follow. This worldview is auction market principles. What drives the market? And I believe it is, there is an auction. I know it's a fact that we're trading auction markets. And I think it's a fact that there is a process of development that all auction markets follow, that they have to follow, because that's how auction markets are designed. And, my journey as a trader began in the mid 1980s, and I was just like all the retail traders are today. I wanted somebody to tell me how to trade. Just tell me how to do it. What is the magic? Just tell me what to do. And I spent tens of thousands of dollars and too many years looking for the magic. I'm an expert in more nonsense than I'll ever admit to. But what I found over the years is that the longer I traded, and that's true to this day, the fewer things that I look at. I try to use things that can be disproved. I try to use things that are logical. I try to use things that are common sense, really. There is no magic in trading. I cannot overemphasize that. All the magic numbers, the Elliott wave, the Gann, the numerology, all of this stuff. And something else, let's just say hypothetically that works. Well, if it does, that's great. What I do will catch it. And it's as simple as understanding market development. And to make it even more simple, now it's not quite this simple, but if the market is making higher highs and higher lows in the time frame you're trading, you want to be favoring longs. If it's making lower lows and lower highs in the time frame you're trading, you want to be favoring shorts. Now, obviously, there's a benefit to understanding the larger degree time frames, but if you just line up the time frame you're trading and the next highest time frame, you can eliminate 99.9% of the nonsense that you see on Twitter and or X now and all these other places. So my message is always to traders, look, keep it as simple as you can. If you don't understand what's going on, stay out of the market. If you're struggling with a time frame, go up in time frame. I can guarantee you that the more granular you try to fine tune the market and trade, the more you go down in time frame, the more random the market is. This is a fact. This cannot be disputed. This can be disproven. It can be proven. So if you're trying to trade the S&P mini all day long for ticks, you're just in a churn. And yeah, can you have some good days doing that? Yeah, you can, but it's random. So, my advice to, especially to newer traders, is to go out in time frame. I don't think anybody has any business trading on any less than a 5-minute chart or its equivalent. And I realize there are different charting formats. You can use range charts and things like that. But if you go too granular in your trading, you're going to lose money. Again, I trade all instruments. I trade ETFs, options, futures, stocks, commodities. I trade family money, and I do it every day. Now, at my age, and just because I have a very active life, fortunately, I have hobbies. I work out, I play tennis. I have grandchildren. I travel. So I'm not going to be tethered to a screen all day long. I'm tethered to a screen more than I like to admit, as most of you know, because I enjoy it. I trade first and foremost because at this point in my life, I enjoy it. It's fun. It's a challenge. It's intellectually stimulating. And my gosh, I mean, the markets are a constant moving target, and we certainly have that today. And by the way, Ben and I are going to talk about the markets at the end of this. This is something that we have been talking about doing for years, getting together and doing this periodically. And so this is the inaugural Ben and Tom trading stock market review. So I'm sort of rambling here, but I wanted to give you a little bit of my background in terms of trading. And again, I've known Ben, I don't know, 15 plus years, and Ben is just a fascinating individual and has just an extraordinary trading story himself. So Ben, I'm going to turn it over to you now and let you do what we all know you do best, and that is
Hey,
talk.
Tom. Hey, everybody out there live and those that are going to be watching this in the future, right? At some point, Tom, this will be on YouTube, I'd imagine. So just kind of a welcome, Tom. That was awesome. And I'm trying to figure out like where to start. I've got 4 pages of notes already after just 8 minutes of intro here. But Tom really touched on a lot of key things there. I wanted to just sort of respond to initially, and then we can dive a little bit deeper into discussions Tom mentioned that we would have. But so cool, so awesome to be able to be here. First of all, I apologize. I don't have live video stream right now. I'm going to work on that for next time that we do one of these, and I promise that. I know the visual feed helps things a lot, so I'll take care of that. But Tom talked a lot about his approach towards trading, eliminating the nonsense. When in doubt, zoom out kind of things, and all of the ideas that sort of trigger a lot of thoughts and energy and feelings sort of inside of me, mainly because this is an approach towards trading that I adopted immediately after meeting Tom, which is actually a great story, and maybe where I should just start. Mutual friend of ours, Denise Scholl, more kind of along the trade psyche type, approach, but well respected in the industry, introduced us, and she knew that I was in a market profile. Tom was in a market profile, which Tom, it's just not market profile that he's into, it's auction market theory, which is like takes market profile and just times 10. But she said, hey, you got to meet this guy. I called him. I had a good feeling about it right away. Called him immediately, and he said, hey, I'd love to meet you. I'm actually in Chicago, but I'm headed to the airport right now. And I asked him, Tom, you remember the story you were talking about 15 years ago? I think it's more like 20 years ago now, in all fairness. But I said,
maybe I do remember
hey,
this. Yeah.
where are you? Let me pick you up and I'll drive you to the airport because I got nothing going on this afternoon. I'd love to sit down and talk to you. And if it's in a car, kind of going from point A to point B, that's fine. Tom, along the way, introduced me to just the enormity of, just gave me a little bit of information, but opened up these doors to me. And Tom, you have this saying, and you kind of, one of the things that's always stuck with me is you said good people in this business attract good people. And I really adopted that and kind of formulated my business approach towards it. I was doing the Squawk Box, and it really kind of kept that mindset, and have shared that with other people, for example, over the years. And I think the people that really do subscribe to that, understand it. Let the others kind of interchain each other and burn each other out, right? The good people in this business do attract good people. And so Tom's approach, a completely different approach than what I was used to when I first started trading. I was looking for what Tom talks about, right? Green arrow, red arrow. I wanted somebody to send me an email, tell me where buy, sell 5, 10, 3, however many times a day, right? Depending on my ability to commit and dedicate to it. But Tom's approach is a much bigger picture, kind of take a step back, less is more approach. And what it really taught me was, before I can even press buy or sell and get involved in a trade, I need to be able to identify trend. And identifying trend starts with the nuances associated with the price probing process, as Tom likes to call it, the auction market theories, these concepts, these principles that he's going to talk about, that we're going to kind of pick apart here throughout this webinar and those to come, hopefully. But the ideas are robust, as Tom calls them. And that's why Tom was talking about trading multiple products, right? Because these ideas, you can apply them across options, futures, ETFs, stocks, bonds. And that's one of the things that attracted me to it right away. But it's a foundational idea, or thoughts, or like concepts, and a way of approaching trading and learning about trend and the nuances of price. It's not, hey, this is where you buy, this is where you sell. So basically what Tom is doing is he's laying this foundation, and then the beauty of it is you get to kind of build on top of that what you want to get out of trading, the amount of time that you have to devote to it. Tom talked about trading different time frames, or looking at different time frames in terms of charts and getting that signal, that in or out. So for me, Tom, really what I owe to you is the kind of the introduction to, the idea of like just building that foundation through the knowledge, through the understanding. And that really unlocks the doors, the potential to find and establish a system or an approach towards taking advantage of some of those understandings, that knowledge, and finding opportunistic positions to position myself with trend. And you could do that counter trend. I don't recommend it. For me, it's always been better with trend, but so you find opportunistic ways to position yourself with it. And then it also, the beauty of this for me is that it really helped me kind of, when I was wrong, to not take it personally, because what it helped me do is identify trend, figure out where to position with it, and then hope it continues. And if it doesn't, if I'm wrong, I know where to get out, and I'm not going home at the end of the day thinking, I'm such a loser, I'm the worst trader ever, I made terrible decisions. I could just chalk it up to, you know what, the trend didn't continue higher or lower, the trend that I was trying to participate in. So what? Move on to the next trade. You know what I mean? It's not a personal thing anymore. So there's so many beneficial aspects here, Tom.
Hey, Ben, let me interject. You hit on something that I think is so important. And the guys that are in this room that are members that are in my live trade room, one thing that I try to do and we have a live trade room, and it's not a room where I'm telling you where to buy and sell all day long. It's a room where we're talking about the market. I give my opinions. There are times where I will say, inflection points, but the most important thing to me in that room is that people get to see me be wrong
Hmm.
all
Yeah,
the
that's important.
time.
Very
And you know
important.
what? You've arrived as a trader when you just don't care when you're wrong, because it's being successful trading is not about always being right in your analysis. It's much deeper than that. It comes into position sizing, uh, trade management, etc.
Hmm.
And the analysis part of it is really probably the least important part of it.
Hmm.
That's
Hmm.
why I try to keep it simple. If
Hmm.
it's like you say, Ben,
You're
it,
saying the trade management and the money management's even more important, you're
I
saying.
think it is. I,
Okay.
I, I absolutely think it
Okay,
is.
that's good to hear. That's important to hear, actually.
And you also mentioned counter trend trading. Now, do I
Hmm.
counter trend trade? Absolutely. But I'm
Hmm.
also still incorporating these, and this is where I think it's most important, this auction market process, because the markets are regressive around value. Now, value migrates. Now, what a lot of traders and what the market profile gurus have hijacked, and they've taken market profile and they've turned it into something it's not. And they've made it an excuse to fade every 10 handle move or 5 handle move. Now, because the market's regressive and it's going to bail me out. Well, the market will bail you out 8 or 9 times out of 10. But I guarantee you, if you're
That 10th time is
constantly
painful.
fading the market, you will lose all your trading capital. I
Yeah.
cannot tell you
Yeah.
how many times I have seen this happen to
Yeah.
traders.
Yeah.
I
Well,
have
you've done
more
it too. I mean,
stories.
you've personally
Oh,
experienced that, right?
oh,
As I have as well.
yeah, we all have.
Yeah.
But there is a time where when a market I'll give you a perfect example where we are now. If my overall thesis is correct about the market, I think we're in a bull trend. I think this is a normal retracement in a bull
Hmm.
trend.
Hmm.
If we're down tomorrow, I'm going to be looking to buy this thing,
Hmm. Hmm.
at least
I
in
like
some
that.
time frame.
Yeah. Yeah.
And it's not because I think it's quote unquote oversold. It's because of this auction process.
Right. Right. Giving the benefit of the doubt to the bulls still, basically.
Yeah, markets don't go indefinitely up in
Right.
a straight line. They don't go
Right.
indefinitely down in a straight line.
Right.
Now, you
Well,
get nuanced with it, but it's still, I have a structure that allows me to use my experience. I
yeah.
have been trading 40 years, but I do try to be consistent and use market structure. Now, this is
Right.
a methodology. Everybody wants to learn how to trade in 6 days or less, and it's not the way it
Hmm.
works.
Well, Tom, what I hear you saying is something, it reminds me of something you used to say years ago. I'm sure you still say it. I just, don't tune in every day, but V tops are very rare. They do occur, right? But the idea, I think what you're saying is it's more likely that we might start to establish a bit of balance up here, get a little bit more overlapping rotational, which I've been arguing for a while is very healthy, right? Because that's establishing value at this new upper level. So the other thing is, I'm listening to you, Tom, and I just want to, for those of you who are new to Tom, myself, for example, I don't mean to, say this, but Tom's the real deal here. This is genuine stuff, and I mean, kind of getting back to when I first got introduced to Tom, I'm a very skeptical person. I'm buyer beware. I learned it because, experiences on the trading floor, in my young adult life and throughout my adult life. And basically, Tom talks about how there's this no one size fit all. I mentioned you guys a minute ago. That's what I was looking for. Everybody wants that, or they think they want that. I jokingly say, how boring would it be if you actually found that where you just got something that said buy here, sell here, and you made money, consistently doing it. It wouldn't be any fun, right? It would just be you'd be looking for something else. Um, but basically, this is again, this is the most kind of basic approach towards avoiding the hop skipping around trying to find something that works. It's learning about trend. It's learning about the nuances of price. Again, learning about separate time frames. But again, I think it's really important. And I took Tom's point a minute ago. It's not necessarily talking auction market theory concepts and ideas and principles. It's not trade management. It's not how to size into a trade. It's not going to trade you. It doesn't teach you trade emotion management, right? For example, the emotional aspect and the psychological aspect of it. So it's limiting in some ways, but I think it's really important to kind of focus on the positives here. And again, Tom, when I learned about this stuff, I was trading tick for tick, I was donating tick for tick, as I like to say it, just giving money to the market. And as my brother used to say, beating your head against the wall because of how good it feels to stop. And what I learned about was again, positioning with trend, but I also learned something that was, speaking of my brother, I always tell the story about how he spent a little time on the trading floor with me. It just wasn't his thing, but after a couple of years, he started getting the idea of, hey, maybe I'd want to trade, not be on the floor, but want to trade. So he got a couple of interviews in a couple of these brokerage houses out that were looking for, algo traders. And as the floor was transitioning, anyway, he was in a room about to get interviewed by this guy, and the class had just let out of young traders before him. He was basically trying to get into that class, and the guys erasing the board, and it said, learn to love to take small losses, which kind of gets back to something Tom was talking about you didn't necessarily say it verbatim, but loss being part of trading. And I took a note here. I'll think of it in a second. But so what I like to think about, Tom, and what kind of helped me in terms of understanding the idea of loss, and I think you were talking about, like, I don't have 90% winners or something like that. I can't remember. But anyway, for me, it's sort of like, this is a business, right? This is like a construction business. And I oftentimes kind of create this environment. It's very similar, very parallel, where you got to spend money filling up the tanks of your bulldozers and your cranes and your all the equipment that's going to get you the jobs and help, the right tool for the right job to get the concrete laid down, be able to bill and invoice your clients. But hey, filling up those dozers and all that, it's expensive as hell, right? Those losses are tough to stomach, but it's part of trading. It's part of the business. And so again, just sort of, I got a little bit off track there, but basically the idea being that, yeah, this is the real deal. These are genuine thoughts from someone who's been there, done that. Tom, you said you've got what? I took note here. What do you got? 30 years trading experience, you said, or something?
Almost 40.
Okay, almost 40. I've got 25 years plus, since the first day I was ever introduced on the trading floor, and personally trading 23 of those, 22. Like I said, I was donating for a long time, but Tom really helped me turn things around, and from multiple levels, like a approach and an emotional, because the approach kind of fed into the emotional. So the less is more, distancing yourself and some of the other things, you eliminate the nonsense, don't understand, zoom out, say, hey, in all fairness, Tom, correct me if I'm wrong, but sometimes trend's more easily identifiable than others. And I've always said, when it's really screaming out at you, screaming, hey, you look at me, that's when you want to be participating a little bit more heavily. And when you're kind of like digging for it and trying to, like, when you've got to overanalyze, that's when you want to take a step back and not necessarily be so involved.
Right. And that's a great point. Again, I've been staring at screens for almost 40 years, and people, some of whom I can see are in here, will tell you others. Sometimes I'll go, look, I don't know what's going on.
Yeah, I love that. Yeah.
And then, because
that's okay though. That's okay.
Well, it's reality. It's just
Yeah.
reality. Sometimes
you don't have to know what's going on
what the hell's going on.
Right.
And then you just stand aside and it clears up. So you have to know, you have to be, this is the most humbling thing anybody will ever do. And I have certainly been humbled and humbled and humbled. And I have finally gotten to the point where, I accept that I'm going to be wrong, and I accept that there are times where I don't know what's going on.
Yeah.
But I also I know from experience. I mean, it's very, very liberating to say I don't know,
Mm-hmm. Mm-hmm.
because if
Mm-hmm.
you don't know,
Like you
then
said, there's nothing wrong with that.
there's no pressure on you to
Yeah.
do anything.
Yeah.
And so, I'm not in here trying to think, okay, well, I have to make $1,000 today. That's not the way it works.
Mm-hmm.
I'm trying to generate consistent returns. I'm trying to have
Mm-hmm.
small drawdowns, and I do that by trading different time frames and
Mm-hmm.
different instruments. And to me, that's the best way to
Yeah.
trade.
Yeah.
Uh, I think part of the reason so many traders fail is they come into this with unrealistic expectations about what they can achieve, especially based on their experience level, because you
Mm-hmm.
cannot just sashay into trading, open up an account, and start minting money. It does not work this way.
Tom, I'm like I said, I'm just sitting here taking notes because I want to touch on these points, but I tend to overtrade, right? So that was one of the things that you helped me learn how to do was like, we always used to joke in the chat when we used to say, what's the saying? Don't just stand there, do something, right? Instead, it's no, with trading, it's, hey, just stand there. Just don't do something. Just
Right,
stand
right.
there, stupid,
The
right?
hard, that great point.
Yeah.
And
No,
it's funny. Almost all traders, at least at some point in their career, and usually at the beginning, overtrade.
yeah,
That kills more
absolutely.
traders than
Yep.
anything I can think of.
Yep.
And it also is really showing that trader that they don't know what they're doing. They're
Yeah.
nervous
Hmm.
about being in the market,
Yeah.
and they're
Nervous
nervous
about being
that
out, as you
they're
always used to
nervous
say. That's
about
right.
being out of it.
Oh, I can remember that feeling so bad.
So
So bad. I remember one time on the trading floor, I jumped on the phone and a guy goes, "What's the matter? What's the matter?" He goes, "You in a bad position?" Something just happened in the bonds. I was trading mid-am bonds, Tom, and I go, "No, no, no, no. I'm thinking I'm missing out on a position."
yeah, exactly.
And he looked at me, he was like, "You're crazy, man." He was like, "You are crazy." So I think this is this approach actually, the idea that Tom just communicated about no pressure to do anything, that comes from the ability to diversify, right? Tom, you always used to say if you're only trading the S&Ps, then you're going to find yourself in positions that you shouldn't be in, right?
Yeah,
Trading,
you force things. Yeah.
yeah, you force things, right? The more it can be not a one and done for me really helped. Like incrementally putting on a position, then getting out of a couple, but staying core long, trying to participate in a trend over a longer term, and trading around it, for example, it helps me out a lot. Okay. And but the diversification in terms of trading multiple products, I think is really important as well, because again, if Tom always used to say, and one of the things I learned from Tom was if you're only trading the S&Ps on a 5-minute time frame or something, for example, it kind of reminds me of this example that I used to talk about, Tom, is when my kids were really little, we used to put them to bed early, like 7 o'clock early, and so this time of year, it's now, it's light out here till 8:30. So I used to, if the kids went to bed and everything was cool, and I looked at Jessica, my wife at the time, and she kind of gave her that look like I wanted to go fishing. I'm only about a block away from the lake here where there's some really good perch fishing, throughout a couple times of the year. And if I gave Jess that look and everything was cool and she kind of nodded her head and said, "Go have fun," I would hustle out to the lake thinking, "Hey, I'm about to go fishing." It's kind of like a lot of these guys who try and trade while managing another job. They get a day off and they're like, okay, they turn on the screen, open up the platform. They're like, I'm going to start trading. But I would get out to the lake and the waves would be crashing over 5 footers over the rocks. I couldn't even get close to the rocks. You know what I mean? So the market creates this environment for you. You don't necessarily determine when it's time or when you get to trade. You should be kind of waiting for the signals from the market. If the water had been flat water and I'd gone out there and I could kind of get as far out onto that farthest out rock that I needed to get to cast, get that lure 10, 15 feet out, then that's when I'm going to catch fish. But not when the waves are crashing over and I'm almost slipping off the rocks and falling in the water myself. You know what I mean? Does that make any sense?
That makes total sense. And the analogy that you're using, your fishing analogy, is what I talk about all the time. I'm a market condition trader.
Yeah.
I try to
Yeah.
train people to trade market
Yeah.
condition. And it's one of the beauties of understanding this auction market concept of development,
I'd
because
agree.
there are times where you know what the market condition is. And if you can identify what is the market condition, then you can move into your
Hmm.
strategy for trading that market condition, and then that leads into your tactics, and
Can
then
we
that leads into your money management and your trade management. So
absolutely?
that's the way it works. And it's just like when you go fishing and the conditions, it's there's waves and you can't
Hmm.
get,
Hmm. Hmm.
and sometimes the market's like that. Sometimes the
For sure.
market is just it's not tradable. There are certainly intraday, there are times where the market is just not tradable.
Yeah. Yeah.
And nobody wants to hear that,
Yeah.
but it's reality.
Yeah. No, I sure didn't want to hear it. Everybody seems to want to be a 5 minute candle chart trader, for some odd reason. And even worse for me, Tom, I grew up in the pits, so I used to
Right,
wanted to be
right,
a
right,
tick
right,
trader. It was
right,
like,
right, right,
and on top of that, everybody who's listened to my stuff over the years knows that they've probably heard this one 50 times, but I grew up with four siblings, brothers and sisters. So my mom used to say, "Go do something." She was overwhelmed by us all. She'd say,
right,
"Go do something. Go, go,
right.
go, get away,
Go
go do something."
outside. Yeah.
So as a trader, that's engraved in my mind and my tendencies. Go do something, move a stop, overtrade, overman, micromanage a trade versus, hey, just sit back and just don't do anything. Let the market do the work for you. But that requires positioning with the trend. You can't let the market does not work for you if you're not positioned with the trend. So, and I agree with you in terms of opening up the door to a more intraday time frame. What I learned from your teachings was that it made you more susceptible to kind of the head fakes. Basically, you get shaken out of trades that are valid trades over the longer term. But here you are trading a 5 minute candle chart. I'd go home some days after doing that. I bought, I sold, I was right, 30 times, but I lost money. And
Right.
I'm like, what
Exactly.
happened?
Yeah. Right. Yeah. The market was up all day long. You only bought, but you lost money.
It was like it
And
knew when
people
I was
don't
in and knew when I
understand.
was out.
Right. 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 All right. Listen, we've been yakking here, Ben, for about half an hour, and let's spare these people. We will
Well,
continue this. Ben and I can, between the two
the
of us,
history, you mean?
we could talk. Yeah,
Yeah.
we could talk
Yeah.
forever, and we will intersperse that because I do think it's important. I think it's important that you guys realize that we do actually have some experience
Yeah.
and
I
have some.
agree.
We're trying to share some knowledge. One thing I want to do real quickly, Ben, let me show my screen
Okay.
here. This is my website. It's alexandertrading.com. I do a free weekly update. Go to the website, click on weekly update, and you can see past updates that I've done. And I think it will be instructional for you. I don't know how far this goes back. It might go back more than a year, but you'll get a feel for the type of analysis that I do. You can get a feel for some of the things that we're talking about on here now. So Ben, let's talk about the markets right now for just a minute, if we can. I'm
For
going to give a
sure.
few thoughts, and then
Okay.
you can give your thoughts.
I'm count me in.
I've been talking for months about, I'm not the only one, about how bifurcated this market is.
Hmm.
It's the most bifurcated market that I can recall, Ben, for the longest period of time. We had for almost a year, we had the NDX and the SPX, and of course we all know why, we 6 or 7 stocks, uh, big high cap stocks, high tech cap stocks leading the market up, and the Russell got left behind. And now everything has joined the party. Now, say everything's joined the party, and we've had this big sell off for 3 days. But to me, the sell off that we're seeing now, Ben, is actually comforting, if you know what I mean, because everything sold off today.
Yeah.
So maybe we're getting to a more normal market phase here.
Hmm. Hmm.
My thesis is we are in a bull market. We're in a bull market that has higher to go. Now, I'll run through the 4 primary U.S. trading indices in just 2 seconds. As long as these markets hold levels on these retracements and the retracements are normal, you have to give the benefit of the doubt to the upside. Now,
Hmm.
let me say this. If I'm wrong and we're in a bear market,
Hmm. Very
that's
possible.
That's great.
Yeah,
Because bear
because they'll
markets
present
are
other opportunities.
awesome to trade.
Yeah,
To me,
right.
bear markets are easier to trade than
But
bull
but no
markets.
indication of that as of yet.
No, I don't
Right.
see it. I just
Right.
don't see it. But the market is, if we're going to have a 50% correction, it's going to take 18 months, and it'll take, you'll have incredible rallies, you'll have incredible declines. Bull markets tend to grind and grind and grind higher. Quite frankly, to me, it's always been easier to trade a bear market than a bull market. But I think
Interesting.
we're in bull markets. Now, let me run through real
Tom, can I just
quickly.
jump in here real quick and
Absolutely.
kind of just polish up that thought? It's very possible that we have just now transitioned into a bear market, but kind of getting back to what I mentioned before about how you always said V tops are not as common as you think or feel, right? As a trader, you kind of always feel like this is just going to reject this upper level. I should be getting out, right? And maybe
Especially in
we saw the
equities. Yeah.
high, right? Right. But a bifurcated market does not a sell signal make, right? And along those lines, if we were to get a little bit more rotational here right now, that is, as Tom mentioned, a little bit more normal, right? Because the market, as I learned from Tom, and one of the thoughts I expanded on is most of the time the market spends its time in that horizontal, that random, inefficient or low conviction phase, versus that high conviction phase that it looks like possibly we're transitioning out of, where we're just making higher highs and higher lows, making new record highs on a fairly regular basis. So the market's job is to help facilitate trade and bring about
Exactly.
that
Right.
buyers and sellers. And so that's what happens when we go into that sideways phase versus the vertical phase, which in this instance is inefficient for the buyer. It's very efficient for the seller, right? They get their price. The buyer is struggling they got to pay up and pay up and pay up constantly. But that type of a phase is less normal. It's more normal to be in a balance phase. And then lastly, a balance phase at this point on these record highs, Tom, correct me if I'm wrong, but it just confirms and validates the working assumption that we're trending higher. It's acceptance of the most recent all-time highs, basically.
Right. Yeah. And the fact that the New York Composite, the equal weighted S&P, the NASDAQ composite, all the indices have made, now the exception is the Russell, but the Russell had just an historic rally out of the breakout of a balance area. So everything to me is pointing to the fact that we're in a bull market. Now, if we start taking out levels, we'll revisit that. But let me show real quickly, and this is real simple stuff. This is the SPX, S&P 500. Now, what I've drawn here on the chart are the retracements since last November. And they've been very, very benign. Actually, today we're off from print high to print low today, 2.44%. That's nothing. Now, this level down here is an important level. If we were to take that out, that would be interesting. But that's the level. We're also, as I like to say, we're in an elevator shaft. Again, I don't use magic numbers. I'm not drawing a Fibonacci retracement and saying, well, here's the 50% retracement, here's the 0.786 retracement. A market, and this is one of my pet peeves, okay? I don't want to get on a soapbox here, but the Fibonacci people, well, hell, the market is going to hit a Fibonacci retracement, a Fibonacci extension every other tick because there's so many of them.
Right.
So I don't, again, I lean on auction market concepts. This market, the SPX now is in this panic conviction.
Yeah.
So if you're looking at quote unquote support resistance, there's really no auction market objective quote unquote support. Now that doesn't mean we trade down here until you get down here around this 54.45 area.
Okay.
And the decline so far is a nothing burger, 2.4.5%. I mean, come on.
Wait, did you say 55 or 54.45?
It's a 54.45.
Okay, I think you said 55.45. Just to correct you, because that is. I wanted to be sure of that. That's important.
Yeah, right here.
Because we're right at 55.45 right now.
Right.
I wanted to be sure. Tom, real quick, let me just jump in. I like to think of it like this. I was jokingly saying on a big move lower like this off an all-time high, keep in mind we have now just come off an all-time high from earlier this week, right?
Right.
So
Yeah.
so of course I was jokingly say, hey, don't go into the closet and pull out that Chicken Little costume and start running around the cul-de-sac right now, because your neighbors are going to think you're nuts, right?
Right.
The guys that are looking at this longer term chart, those that are trading the 60-minute are going to go, the sky's falling. But the longer term, I always point out that level you just mentioned, that's why I wanted to make sure we were talking about the same level, 54.45-ish. That's the July low. So
Right.
yeah,
Right.
we've
Right.
come
Right.
off an all-time high. It feels like a huge move. We haven't even taken out the lows from earlier this
Right.
month.
Exactly.
It's
Right.
like,
And here's the index. Now the index is a little bit closer to the equivalent low in the SPX. Its equivalent low happened to occur at the end of June, not that this it was, I think, July 1st, the SPX, but close enough. But the point is, even if we were to take this out, you're talking
mm-hmm,
about still less than a 6% decline.
mm-hmm,
The decline back in at the March high was about 8%. So
mm-hmm.
you get bigger ramps up and down in the NDX, but so far it's just not, it hasn't been that big a deal. And then if
Mm-hmm.
we look at let's look at the New York Composite. The New York Composite is traded to a new all-time high. It had a pretty big drop today. That's fine. What are we leaving? Oh, the Russell. Let's look at the Russell. This was classic, man. And if you guys will go
Mm-hmm. Mm-hmm.
look at the weekly reports, I talked about this for weeks. The breakout of this balance area.
Yeah.
This is classic initiative behavior. And then the Dow was traded until today in new all-time high ground. So are we having some sort of retracement here? Yes. What does it mean?
Mm-hmm.
My assumption is it's a normal pullback and a bull trend.
Yeah. A lot
Uh,
less than most people are making it out to be, you're saying.
yeah, and
Yeah.
there are other things that we'll look at along the way to help fine
Sorry.
tune this, but I just it's business as usual as far as I'm concerned in this market. So I do want to see. Let me show one last thing here, and then I'll shut up and let you wrap it
No,
up
not
for
at
us.
all. Not at all.
This is a chart that I find really helpful at times. Now, this is the SPX, a 30-minute chart, and below is breadth, just NYSE net breadth. Now, this has been almost worthless information since last November. But there are periods of time
Hmm.
where this can be extraordinarily
Hmm.
helpful.
And you think this
And
is one of them?
well, we could be getting there. I mean,
Yeah.
if you look at this, this is breadth closed today at the
Yeah.
lowest level it's been since over here back in mid-June. Now, if things are getting more normalized here,
Mm-hmm.
this will give us incredible heads up to be
Mm-hmm.
looking for those lows.
Mm-hmm.
It's not as good identifying highs. And I've talked about this ad infinitum with clients and members over the years. But this is a type of thing I use. I don't use oscillators. I don't use indicators. This is internally generated information. Now, I do use moving averages. I find moving
Okay.
averages as a nice visual crutch
Okay.
because, and this is something else that is irrefutable. All big trends happen on the price side of a moving average.
Okay.
That's just a fact. You
Okay.
never want to be on the wrong side of a moving average in the time
Okay.
frame you're trading for long. I mean,
Interesting.
it's simple, right?
I had, I'm sorry, I didn't fully introduce myself in terms of what I'm doing now, Tom. Just real quick plug that I am the host of the Future Show on the Schwab
Yes.
Network. And you mentioned that, I think, right in the beginning, but I had a guest on, one of the original turtle traders, Jerry Parker, comes on the show on a
I
fairly
love
regular
that guy.
basis.
Yeah.
Incredible, right? Trend follower to the heart, and nothing else. And I asked him this just the last time he was on. I basically said, "Hey, point blank, Jerry, at these all-time highs, we all want to know, what do you see in terms of a trend change? What signals you that you've been talking for months and months that this is uptrend, but how do we know when it isn't any longer, per your experience, your knowledge, your." And he said he watches the golden cross versus the death cross, to your point, the moving averages, right? When the 50 crosses the 200 and to the upside, to the downside. And he said that will give you a very good long-term kind of gauge of which position or which side to be in the market. And I like the idea in terms of I wrote down business as usual. I don't remember where you use that, but just kind of this market, right, being a little bit more business as usual, I think, than I can't remember. But hey, real quick, first of all, sorry again, I just smacked another a fruit fly that's been in the kitchen here, but I'm close to it. But Tom, can I steal the charts real quick? I want to show something.
Absolutely.
Okay, cool.
All yours.
Um, Let me just see. How do I do this again?
Go down
I
to share screen.
share screen here. Hold on, hold on. Usually a little better than this. More, I'm assuming. Raise hand, participate, share. Yeah, share screen. Um, multiple. Whoops, hold on. Share. Okay. So Tom, sometimes I feel like when let me just make sure there's the one you guys should want to see. Share. You got my chart here. We're looking at SPX, right?
Yeah, perfect. Got
Okay.
it. Yep, yep.
So I sometimes I feel like when I talk about the things the way Tom introduced me to these ideas, and I felt like if I just sort of looked at it as he was giving me green arrow, red arrow, I would be insulting him, because what he's really doing is he's teaching you something and he wants you to build on it. It seems like, right? He wants you to like take it to the next level. And then better yet, even come back to him, as Tom always said, show me if I'm wrong. Right? You would always say, "Hey, these are the ideas. These are the ways I approach." But if I'm wrong, let me know sooner rather than later. Because if I'm
Yeah.
I'm on the wrong track here, I want to turn around. Right? I don't want to be chasing my own tail around, basically. And that's one of the things I liked about Tom originally, is he was always very candid about, "Hey, if you see something that's flawed," my guess is people aren't calling you on a regular basis, going, "You're making a mistake here." Um, so so what I always looked at was Tom was providing was kind of, again, that foundation, but the idea that this is a team effort. So and again, kind of getting back to what I started off by saying, is good people attract good people in this business. So the thought process being that stick with me and we'll both get better at it, you know what I mean, and we'll both learn from each other throughout the process. And it's really interesting thing what Tom does, because in theory what he's trying to do is get rid of all his customers, which it always blew my mind, as a when you're teaching people how you trade, basically you're trying to give them the insight, the knowledge, and eventually once they learn, they don't need you anymore in theory.
Well,
So
Ben, let me interrupt you real quickly. And this important. I don't want to forget to say this. I mentioned how humbling trading is. Well,
mhm.
I have been, the trading education thing is, quite frankly, it's a pain in the ass. It really, really is.
I love how you're honest about that. That's
It
very
is
true. Yeah.
so frustrating.
But but
Okay,
but what do you get out of it then? Do you
well,
learn every single time? Do
here's
you?
what I get out of it. Okay, I have met some of the most
Yeah.
extraordinary people,
Yeah.
and again, I'm constantly humbled
Yeah.
by some of my clients, because
Hmm.
I have so many clients that are just so smart,
Yeah.
and such extraordinary people in so many different fields, and they come in and I learn from them, and
Mm.
I learned from you, so
Yeah.
that
Yeah.
that's really
Yeah. Priceless.
what keeps me
Yeah.
doing this,
Yeah.
because most of the time it's a royal
I
pain
can
in the
understand
ass.
that. I can understand that. My kids they used to see me get fired up having conversations with clients, because trading is kind of isolating. It is in some ways, right? And so to be able to have that avenue to sort of um, you know to feed off of each other is important. And Tom, you've created a really good environment for that. Let me just kind of give you a pat on the back, because it's the genuine aspect, like I talked about before, that this is the real deal. And not talking about hop skipping around. It's, hey, stick with this, and positive expectancy, and some of the other things you've really instilled in us as traders. But okay, speaking of that, as I was saying a minute ago, I feel like sometimes when I talk about trend, I've taken Tom's stuff, and I feel like he's sometimes every once in a while I feel like I'm going to be like, say something, and Tom's going to go, no, 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 that's not what I was talking about, Ben. But I've evolved Tom's philosophies, mindsets, ideas, and principles to basically, and I'm not going to draw a ton of lines on these. I don't have my regular charts with me today, but I kind of look at price activity through the lens of, let me just do this real quick so I don't mess things up. Create a 6. Okay. Okay, so I always look at price through the lens of the concept that we're in a high conviction phase or a low conviction phase, and you transition from one to the next, sometimes more easily identifiable than others. But this is always playing out across all timeframes, all products, bull, bear, bonds, whatever. That high conviction phase, again, for me, sorry, give me a second, is if you look at this, it's kind of like really big move up from like November, we're talking about, into, we'll call it February, and from February we go, boy, I hate using red, but in this instance I'm already stuck here. So actually give me 1 second, guys. I apologize. Let me do this. This is going to be white. I just don't like using red anything. I hope you understand that. Oh, hold on. I'm going to set it as default. Okay, so you go from this high conviction phase and you transition into this horizontal low conviction phase where we were running it up, right? And I could kind of get a little bit more granular. Here we were a bit sideways, here we were a bit sideways, but again, just bigger picture. Boom, it's like out of the box. And then you kind of lose some of that and you go a little bit more sideways. We'll call it 5,000, 5,100, whatever, this area. And then again, you kind of break out again. You know, it's that high conviction. Wait, hold on. Where's my, there it is. That high conviction phase up. And this is sort of what we were just talking about. Like, this is tough to sustain, right? This initiative phase up, the breakout. Hold on,
it's not going to go up at that rate of change. I mean,
that's right.
We may be in a bull market for the rest of our lives, but it's not going to go vertical indefinitely, day after day after day.
And correct me if I'm wrong, Tom, but the example you used in terms of, hey, we could be in for a bit of a retracement, losing system resources, manufacturer audio. Let me close this out. You were kind of referencing this example. You were like, hey, we could be in for a little bit of a period of
we haven't even had a close to a 10% retracement.
Right.
I think the biggest retracement we had was this one. I think it was what? Less than 7%, 6 and change.
Yeah.
Right.
So my point is just, hey, to go a little bit like this right now and get a little bit horizontal and just kind of establish that we've accepted this upper area, or we're now, you know, there's no there, you know, if no, assuming like we were talking about, no V tops forms up here, we don't just scream lower back down to 5,000, which would hurt everyone, right? Assuming that doesn't happen, if we get it, that's very healthy in the very similar fashion as far as this was healthy, with the mindset being that continue. Look, in some ways, this is what I always point out. You could take it a step further. This was a balance area in some ways right here. You had a lower extreme, you had an upper extreme, kind of trading around this 4,300. And again, I talk about balance areas maybe a little bit differently than Tom, but the idea being the 2 phases of development, which is important. So again, kind of getting back to this area up here, something more rotational, something horizontal would be very good for the bulls because it's accepting of this upper level, with the idea being that the next phase would be, once again, going back into something like this, you know, and kind of getting into this phase. So real quick, I just want to show you, and sticking with that idea that I don't have anything like statistical to back it up with over 30 years of watching price activity. Tom says no one else has more experience watching price. I jokingly say tick for tick and kind of calling the pit the way I did. We have a very similar experience in terms of watching it on a very close personal basis. But what I like to be very clear about is, again, there's markets. I don't have statistical information to basis, but I will tell you, when we're trending higher like this, my experience is this is not Johnny one lot driving this market. This isn't you and me, Tom, that are driving. This is big money behind this move. And I'm going to show you a couple other real quick. I want to show you, because let's just look at this, for example, similar pattern to what we just looked at, right? Very similar time frame, bottom left, top right, right? We're going from October of last year in gold now to present time. A very well-defined trend, top left, bottom left, top right. I'm going to add time onto this. I mean, a lot of time on. Watch this. You're going to see a very similar pattern. Let's just go max available. I mean, look at this. Similar pattern, right? Bottom left, top right. You can see areas where the market consolidates versus what we're kind of seeing, which actually appears to be a bit of a vertical type move out of this kind of smaller area consolidation, the very narrow range. But just kind of getting back to this 1 year of price activity, you can see sideways, breakout, green candles, high conviction, sideways. Look at this, green candles, higher highs, higher lows. That's energy. That's initiative type price activity. That's not very efficient for the buyer, right? Because the buyer's scrambling to get their price. They got to pay up, pay up, pay up, pay up. Sellers just like, oh, I'll put an offer out there and they get taken. And then this is more efficient for both. We go into a very long period, April all the way into this most recent breakout, which could be a false breakout again, and maybe even appears to be, right? We could work our way back in, but it was an attempt to auction higher is the way I've always kind of looked at it. And even if it's a false breakout, that's not necessarily a bearish signal, because we could come back into this range. It could provide you another buy opportunity at the lower extreme of this range around 2,300 and just take a little longer than you wanted it to kind of, again, break out to the upside. And then, like I said, transition from this sideways, right, horizontal into that vertical again. We may have just kind of extended the range to the upside. We may have not gone vertical, but time will tell. But basically the idea is I kind of like to think of trading like this. It's like my kids, Tom, and I always reference my kids. They're very similar, family life, relationships, very similar to trading in my experience. The market gets where you want it to be or where it should be, just like your kids. They get where you wanted them to be, just not necessarily on your time, right? I mean, when my kids were 12, 11, I wanted them to be at this, area of maturity and this, that, and doing this and kind of, having relationships like this, that, and the other thing. They weren't quite there yet. They got there on their time. The market's going to get there on its time. You don't have control over that. You just have control of positioning yourself with it and hoping it continues or hoping it gets there. It may not.
Well, yeah, and I will say this, to me, markets are infinitely more predictable and easier than raising children, having 4. But but
that's good to hear.
Let's wrap up, Ben.
Okay, can I just real quick show one more chart?
Absolutely.
Because I want to make it clear. We just looked at the S&Ps. We looked at gold. We could look at some other really high conviction trades. Like, let me just show you another one, for example, Eli Lilly. Look at this. We could look at NVIDIA. So just kind of the robust aspect of the stocks, bonds, ETFs, the idea of bottom left, top right, position yourself with the trend. But real quick, last thought. If you look at crude, not a real well-defined trend. Look, kind of in a range.
Absolutely.
You see that? What a difference. Bottom left, top right versus just random.
What you've just done is show the extraordinary robustness of understanding the auction market process of development. The auction market process of development is in the market in all degrees of time, all the time, across all asset classes. And let's leave that. Let's leave it at that. Okay. This has been extraordinary, guys. I hope you've enjoyed this. Ben, again, this is the first one we've done. We will get more structured with this. Ben and I both get excited. We go all over the place.
That's okay.
But hopefully you've learned something. And Ben, thanks, man. This has been great. And we'll do this again soon.
Absolutely, Tom. And thanks to everyone who joined in. Appreciate it. You guys have a great evening.
All right. Take care, guys.